What is going on, everybody? It's Stas here. Welcome back to another video. So today, like always, we're going to break down the markets, which, believe it or not, we had a pretty boring day today. We had the S&P, the Dow, the NASDAQ all go up about 0.1%, as we had the Russell go down about 0.5%. So we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, smash that like button, check out my Patreon, link down below, and let's get right into the video. So like we discussed yesterday and in my video earlier today, the S&P 500 ETF SPY, which you guys can see right on my screen right now, is struggling at 445. 445 was the high from yesterday, and it was support a couple of weeks ago, earlier in September, and that is the key level that we have to break out of right now in the very short term in order for the bulls to gain more momentum, right? Hence why I have my alert at $445. And if we start seeing momentum out of there, 445, 446, 447, this could, no joke, go back to 450 plus. Heck, maybe as soon as next week. You know, this stuff could happen quick. So we're going to be watching 445. Not much else to say other than that. I guess we could throw in the fact that we're seeing a golden cross forming here on the 20-day chart as of today. Look at this. You guys can see the 50s crossing above the 180 SMA, which is great. That signals there could be more upside to come here in the near-term future, whether it's Monday, Wednesday, Friday, some point next week, the week after. We don't know, but that is a good sign for further upside here. And looking at QQQ, which tracks the NASDAQ 100, we're also seeing the start of a golden cross, and we're noticing it's also struggling like SPY right by that resistance from yesterday and from a couple of weeks ago, more like 10 days ago, right around 374. Hence why I have my alert at 374. So we'll see, guys. I mean, we'll see next week. We'll get more clarity, more price action. If we break out of these points, again, like I said, we could be seeing more upside. We could see a couple green days in a row even. You know, that's definitely possible. So what do you guys think? Let me know in the comments. And I really want to know, have you guys been buying stocks recently? Did you buy up this dip? Are you just waiting? Are you sitting on cash? What are you doing? You know, I've personally been buying a little bit, but I'm not going all in right here. You know, I still have a good amount of cash on the sidelines. You know, I'm selling covered calls against certain positions that I own to create some income in the short term to build up even more cash. So what are you guys doing? I'd love to know. Let me know in the comments, and make sure you guys hit that like button and subscribe to the channel if you haven't done so already. If you guys do want to see more content from me, that is greatly appreciated as always. So let's bang through some of these stocks today that I'm looking at right now, real time. Number one is Ford, which I'm very happy about how Ford is performing here, and I'll explain to you guys why right now. Take a look at this. Ford is breaking out completely on the 20-day chart, the 4-hour chart. It's looking like we're going for that next leg up, which you guys can see. We had a huge leg up a couple months ago, back in May. Middle of May, we went from 1120 all the way to 1650. I believe this is when they announced their Ford F-150 electric vehicle, or I might be wrong on that. I'm not exactly sure, but I believe it was that same time that they started announcing that. And that's a sick-looking truck, by the way. I mean, I don't know. I asked you guys this before. What would you rather get? Ford F-150 electric truck or the Cybertruck? I'm kind of pulled in both directions. I don't know what I would do. I said before I'd get the Cybertruck, but now the more I think about it, the Ford F-150 electric looks freaking sick as well. Heck, I would like both. Why not have both? But then again, you're only one person. You can't drive two cars at once or two trucks at once. So I don't know. I'm kind of being tugged in both directions. But I'd love to know. Let me know in the comments. Would you rather have the Ford F-150 electric or the Cybertruck? I'm seriously interested. But back to the chart here, you can see we had a very similar period of selling a couple of months ago, and the pattern looked very similar to what we're seeing right now. And a couple of months ago, I'm referring to back in March through May, of 2021. We sold off from 1370 to about 1120. We had a good 20% correction, bear market there, before we had that huge leg up, the breakout of both moving averages, right? And then we hit that 1658 level and saw another couple of months of selling. And you notice we got the couple of months of selling, 3.5 months to be exact, but we're still holding the uptrend. You guys can notice and see here, we pretty much bottomed 1250, 1275, which is higher from where we bottomed last time at 1120. And now we're starting to break out of the wedge here and both moving averages. And we also took the highs out from the middle of September. To me, this looks like we're catching the next leg up on Ford pretty early. And full disclosure, I'm not in Ford quite yet, but I'm pretty dang close to pulling the trigger on this one and opening a position. And if you look on the year chart, you can see exactly what I'm talking about, right? Huge leg up, even back earlier in 2021. We went from 850 to about, like I said, 1350. Then we saw the drawdown, huge pop to 1650, drawdown. Now we're getting ready for the next big pop as we're breaking out as I'm filming this video. So, yeah, guys, Ford, it looks like the uptrend's continuing. I believe we are going to break out. I think there's a chance we could go back to 16, but I don't want to get ahead of myself considering we're not even at 14 yet. But in the short term, 14, 1450, 15, definitely 100%, definitely in the cards. It's very possible. So keep your eyes out on Ford. CCL also reported today, and the stock, well, I said also like Ford reported. Ford did not report, but CCL reported today. Carnival Cruise Line. And you guys can see this played out exactly like we called it out, even though we didn't take the trade. And the reason why I didn't take the trade is because, like I always say, for the most part, other than that GameStop trade I had a couple weeks ago, I don't like holding through earnings, right? I don't like buying a stock, gambling on it through earnings. Not my style. So I wasn't going to buy this one considering they reported earnings this morning. So I missed the move. I'll be completely honest. I missed the move. It's all right because when you skip out on trading earnings, you're going to miss moves, but you also save face when the stock goes down, which happens a lot of the time. I can give you an example here right now. For example, a couple weeks ago, I had SOFI before they reported earnings, and I literally sold, I believe, the day of their earnings report. I sold before the earnings, and then the stock ended up collapsing to 14. And let me show you guys this, for example. Seriously, educational purposes here. This is back when, beginning mid-August, right? I own SOFI here. I made some good money. I sold it at like 17 something, and then boom, it tanked to 1480 right that same day. And believe it or not, I bought back in. I bought back in once they reported earnings. Right after that, I think the day after, I bought at 1550, averaged down a bit, and I'm still holding on to that SOFI position today at 1486. And look where it's at, 1760, right? And if I were to hold through earnings, I would have been in the hole on that position pretty much up until now, which is not a position you want to be in. So that should be a lesson for everybody out there, And I'm not telling you what to do as always, but for me, holding through earnings, it's a little bit too risky because, again, with SOFI, if I were to do that, I'd be in the hole, and I wouldn't have been able to pick it up at 1486 where I'm in right now, and I wouldn't be up a good freaking chunk of money right now. If I were to not sell before earnings, if that makes any sense, guys. So keep that in mind. And going back to CCL, we hit the top of this channel. Sure, there could be more upside, but we are a bit overbought, so keep that in mind. And when it comes to their earnings, they lost, I think, almost $2 billion. Yeah, they had a net loss of $2 billion. They're not making much money on the top line, if anything, at this point. But they are opening bookings for 2023. I believe 50% of their fleet was expected to, what was I reading earlier? Where the heck is that? 50% of the fleet. Oh, here it is. Carnival Corporation on pace to restart over 50% of the fleet capacity by October, which is literally next week. So that's good. And I believe you do have to have the vaccine in order to go on Carnival Cruise Line ships. I'm not exactly sure. I'm not 100% sure on that, but I'm assuming that is a policy, which I don't know. Take it for what you will. I mean, will they lose business long term over that? I have no freaking idea. Will this be a long-term thing? I don't think so. I think in the meantime, yes, they're going to require vaccines, but in 2-3 years, will they? I don't know. Your guess is as good as mine. Anything could really happen. And at this point, again, we are at the top of the channel. We are a little overbought. So be mindful of that. Be mindful of that. And if we do get a pullback within this channel, that is where I might be able to get in. Maybe you. But again, you shouldn't be doing anything based on these videos anyway. You must always do your own research. So Moderna, mRNA, looks pretty decent here. It's pulled back today about 5.3%, down $25 per share. And I'm seeing a bit of an ascending triangle here. Let me show you all this 20-day chart. We have a clear resistance at about 460, but ever since end of August, early September, we've been making higher lows. And as of today's close, on this 20-day chart, we are holding a higher low as well above the previous couple of main lows. So if we start making a move back over both moving averages here on the 20-day chart at about 435, 440, if we start piercing those levels, this could probably go 460 plus again, and we could end up seeing a squeeze out of the resistance of this triangle, which in that case would be the ascending triangle playing out. And we could end up seeing a move maybe back towards those all-time highs near $500. So watch out for Moderna. AMC is another one that's looking pretty interesting right now. We had a massive run throughout the end of August into the middle of September. This went from 35 to 52, which is huge, about a 35-40% run there. And now we've seen a bit of a collapse a little bit from 52 to 40. That is a drop of about 25%. So AMC is officially in a bear market. But one thing worth noticing is, or mentioning rather, is the fact that even though we've pulled back a lot, we're actually holding an uptrend. Look at that. We're holding a higher low right now. We're trying to fight over that main 180 moving average on this 4-hour chart. And we've been consolidating the past couple of days. I mean, if you look on this 5-day chart, 1, 2, 3, 4 days of choppiness, consolidation around $38, $40 per share. Now all we need to do, or see rather, is get that pop back up towards the mid-40s, you know, especially past the high point from yesterday at about $41.75, $42 per share. At that point, and I'm going to put my alert at 42, if we start breaking these levels, guys, that is going to show upside momentum, right? And you guys know how these stocks work, especially AMC, GameStop, all the meme stocks. They're momentum stocks. So if they get hot quick, and they have a couple of days in a row where they win. They have good, you know, we've seen many times they heat up and they have a couple of green days in a row. And that could easily be a 20-30% run again, where we could make some good money. So watch out for AMC. JP Morgan, not the sexiest stock out there, but it's worth watching now, considering we're breaking out of both moving averages on the 4-hour chart. We're breaking out of the wedge as of today, and we closed right at the high from the end of August at about 163 roughly, which I believe if we start taking out 163.50, 164, this is probably going to go to all-time highs again. It's looking like it wants to, doesn't it, guys? I mean, let me put my alert at 164 so I don't miss it. And again, now that we're peaking above the moving averages, breaking the wedge, 167 is not too far-fetched. In fact, it's very dang realistic that that might happen next week. So watch out for JP Morgan. QuantumScape is another one which admittedly I don't track too heavily. I do watch the chart from time to time, but recently a lot of you guys have been commenting, which is why I'm peeking at it right now. It's been getting hot again. The stock's at 27. It was just at 19 a couple of weeks ago, so it's up a good 30-ish%, 35%, and now we're actually above both moving averages, which is awesome considering this stock has been slaughtered the past 9 months. I mean, it's been a straight downtrend from $73 to 19 was the low, like I mentioned, and that is a drop of 75%, and I think it was over 73 before that, wasn't it? Oh my goodness, it sure was. 132. Oh my God. Could you imagine, guys? I don't want to put anyone down out there because maybe one of you bought it at 132 and still have it, which, oh, that's rough. But could you imagine? This was $132 back less than a year ago in December of 2020, and now it just hit 19. I mean, people were, when a stock goes up to 130, 132, there's buyers and sellers, selling, buying all the time. So that means people were buying it at 132. I guarantee you, maybe not somebody watching this video, but I guarantee you somebody out there does own shares of QS at 132, which is just insane considering from 132 to where it is now, the stock is down 82%. But now that it's down a lot, 82%, it's starting to reverse. The risk reward is pretty decent, I'd say here, considering we're breaking out. And on top of that, we got some news. Let me see if I could find it here. Let's see. Give me a second, guys. Come on. Here it is. Their shares climbed 14% Thursday, with volume up 270%. On Tuesday, the company announced that it signed a deal with a major automaker to evaluate prototypes of its solid-state batteries. It's risen 26%. The stock has over the last 5 sessions, but like I said, it's still down a crap ton. I wonder what that automaker is. Do you guys know? I probably should have read into this more, but I'm not seeing it here. Maybe it's not disclosed. I mean, I don't know why that's not disclosed considering QS is a publicly traded company. Maybe we're not supposed to know yet. But anyway, guys, this stock has just been hammered. Now maybe we might get some signs of relief, maybe a little bit of a rally here after that pretty solid catalyst. So yeah, QS, if you bought it at 130, no offense, but I feel bad for you. I'm just going to be honest here. So SOFI, SOFI. This is the last one we're going to talk about today. This one has been on steroids the past couple of days. I don't know what else to say. It went up 3% today on top of the 11% move that we saw. I believe that was yesterday or the day before. It's trading well out of this downwards channel. It's above the moving averages. We're seeing a golden cross. All these bullish signs. And today, what was even more bullish is the fact that we took out the highs from yesterday and we broke 1750, which was a high point from the beginning towards the middle of August, right? You guys can see that is actually where we were talking about it earlier in this video, where I sold it before that earnings report and it collapsed to 14. It was right around 1750 at that point. And 1750 was also resistance back in March, April, a little bit in May as well. So now that we're breaking out of these levels, I think there could be more upside, right? And if you guys don't remember, I own SOFI at $14.86 right now, and I actually sold covered calls against it, the October 1st $17 calls, and those are looking like they're going to expire in the money. And one thing that you could do, if you're selling covered calls, it's not the expiration date quite yet, and maybe you want to hold on to your stock, because one downfall about covered calls is if they expire in the money, you have to give up your stock at the strike price, which in this case, 17 is the strike price. I have to give it up at $17, and I miss out on all of this upside that we're seeing right now. One thing I can do is when you open a covered call, you sell to open, right? That is how you open the position. But now, if I want to keep the stock, I can buy to close, right? I can buy back the options that I originally sold to close, and I take a little loss there on the premium because I believe right now the calls that I sold them, and I received about 42 cents premium, I believe, and now the calls are selling at like 80-90 cents last time I checked. So I would take a little loss there, but the idea is the loss I take on the premium, right? Bear with me here. The loss I take on the premium will be recovered from what the stock is going to gain from price appreciation, which I wouldn't get if I were to stay in the covered calls, because again, I'd have to give up the shares at $17 per share. And let's say it went up to $18, $19 per share, I would have made way more money on just keeping the shares, buying a close, than I would have if I were to give up the shares and kept the premium. Hopefully I didn't confuse anybody there, but yeah, I'm in a little bit of a dilemma right now. I don't know what to do. Well, I have an idea of what I want to do. I know the different options that I have, but I'm in a dilemma anyway. I'm going to wait and see what happens next week. Perfect scenario would be, though, next week SOFI has a soul-crushing day. Maybe it goes down 5%, 10%, maybe not 10%. But maybe it has like a 5% red day. The premiums or the calls I sold go down a ton. I can get out of them, and then I keep the shares. We'll see how it goes, guys. We'll see how it goes. Either way, if I get assigned, it's not the end of the world. I make money regardless, so we'll see how it goes, guys. So if you guys have any questions on options, drop me a comment down below. I do have a couple of videos on selling covered calls. I'll pop it up at the end of this video. So if you all found value in this video, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon if you want to keep up with all my moves, options moves, long-term investments, trades. You want morning update videos, more access to me throughout the day as well. All of that's on Patreon, link down below, or you guys can go to StockSurfS.com/Patreon. Make sure to also get your $30 from, M1 Finance, or 2 stocks from Webull. Those are linked right down below as well. And that's it. I'll catch you guys in the next video. I'll pop up the covered call video here if you guys want to learn more about that strategy, how you can actually make money there. I'll see you guys there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Peace out.